Hey everybody, Boris. Welcome to the commodity dollars for April 17 to April 21, 2017 for Aussie dollar, Dollar-CAD, and Kiwi dollar. The com dollars this week are actually going to be more front and center than the majors in some ways, and certainly the Aussie takes center stage because of not relatively, but very, very good employment data last week. They should probably have some carryover flow into this week. On the calendar this week, there is some commodity news. We have the monetary policy minutes meeting. We have the dairy auction out of New Zealand and the CPI data out of New Zealand, and a little bit of CPI data out of Canada. The big story, though, I think is going to be whether Aussie can get any kind of continuation off of this very, very strong employment data. Certainly, the fact that employment data was much better than expected, 3 times the size of what the market looked at, and the fact that Chinese data seems to be supportive, and then we have the Chinese GDP also coming out on Sunday, which, if that is also supportive, would all indicate that the RBA now stands on a different side of the spectrum being neutral to tightening versus neutral to easing, which is where they were before. In other words, they were basically neutral, but perhaps with a bias towards easing, whereas now it really looks like they could be neutral with potentially a bias towards tightening if the situation merits it. Although, I mean, obviously, it's very unlikely. In some ways, the Aussie could get a stronger bid simply just from the fact that U.S. yields continue to compress. Because if the Aussie yields remain at these levels, this is going to make the carry trade just a little bit more attractive. So it'll be interesting to see how the week shapes up. Certainly, the monetary policy meetings will give us a little bit of a clue. And then on the other stuff that we have on the com dollars, it's really the Kiwi that's going to be of interest as far as the CPI data. Because if the CPI data comes in relatively hot, that should also prevent the RBNZ from any further rate cuts as we go forward. It could provide a little bit of support for the Kiwi. Now, looking at the levels really remain relatively the same in all the com dollar pairs. 75 certainly held very nicely last week, and now it's really 76. 77 is, of course, is a stretch, but that sort of left the wide ranges as still the operating ranges for the com dollars. I would say sort of the bias now is that the support held, and we have a bias up in the Aussie. With Dollar-CAD, it's perhaps the most interesting in the sense that it completely flipped itself around and became weaker as the week came in, and it gives us a very interesting opportunity, I think, in the crosses, which we'll discuss in the next segment. And with the Kiwi dollar, a more muted variant of the Aussie, which is support held at 69, and now we have the potential to go back up towards the 71. Let's take a look at the charts here and just see how everything shapes up. So you see the Aussie here, 75 definitely holds. Nice big move off the Australian employment data. We're holding near the highs. 76 becomes the next level of challenge, but of course if that gets taken out, that really opens up the run all the way up to the 76.50, which is the big resist point over there. For now, this double bottom certainly shaping itself up. Any kind of a pullback here seems to be a very decent buy opportunity as long as 75 holds, or let's be sort of generous and say as long as 74.80 holds on the level. But really 75 I think would be the level at which I would want to bail out of that trade. Dollar-CAD, on the other hand, that had a big flip around, and dollar really gained against the caddy significantly over the last. I think this was really off the BOC statement, which was very confusing because you had sort of a BOC statement that raised Canadian growth, but then at the same time said they were still open to the possibility of a potential rate cut, even though they did acknowledge massive real estate bubble in Vancouver and Toronto. There's a lot of confusing data sets from Canadian monetary authorities, and I think that's had an impact on the Dollar-CAD as far as it goes. Oil prices also unlikely to get much higher given the relatively muted demand across the globe at this point. And if oil prices start to really trickle back towards the 50, it looks like CAD could go up to 34 on the upside. So I think Dollar-CAD at this point certainly made a big flip to the upside, is the weakest of the com dollars, and the Aussie is the strongest of the com dollars. So you can take a hint of where I want to go in the crosses as far as that goes. And then last but not least, the Kiwi dollar is sort of a junior version of the Aussie, making its way towards the 70 handle here, with 70.50 as the near-term resistance, or 71 as the near-term resistance. Sort of really very much a similar pattern as the Aussie, and probably assuming that the dairy prices don't really sabotage any further news. And really, actually, if the CPI data proves to be as hot or hotter than the market expects, very reasonable chance we could see 71 on a continuation move in the Kiwi. So Kiwi could be a stealth rally this week and one to watch as we go forward. That's how the week shapes up. It's really going to be a strong Aussie week and a secondary strong Kiwi week with Caddy pretty much bringing in the rear. That's the COM Dollar story as we go forward. Wish you guys the best of luck, the best of trading. Boris, over and out.